Hey everybody, Tom Gentile. I want to welcome you to our Monday morning midday live right here from Florida. I am back in Florida. Glad to have you guys hanging out with me here for the next half hour. Plenty to talk about today. And, where do I start? Well, hey, happy Columbus Day to all of you. Happy Indigenous Peoples Day to all of you. And congratulations to the LA Lakers, who, in front of a sold-out digital crowd, captured yet another NBA title. That digital crowd was going crazy, wasn't it? Anyway, guys, glad to have you here. I am still finishing up the studio. I got a little issue, which is why I'm not able to come to you camera live, but I am live with you right now. We're going to work on our right off the computer today. So, couple things I wanted to start with and let you know what my plan is here for you for the next half hour. Number one, we're going to go through all things market. We're going to go through the S&P, TLT, UUP, USO, which is down today. No surprise to me. We're in a seasonally bearish area in oil. I mentioned that here on our program together. Also, I want to talk about cryptocurrencies and the quiet rise that we're starting to see right now that's coming from the big coins. All right. In fact, I actually got a buy signal today on Litecoin. Sharing that with you right here too. Buy signal on Litecoin today, and I'm looking for 100% gain on that one. So symbols LTC, just for any of you that might be interested in knowing. So we're going to talk about those. We're going to talk about past predictions that we talked about right here on this program. And then we'll also look forward to the rest of the month. So before I move on, guys, I want to share with you our latest video, and I'm going to be talking about this toward the end of the program. I'm going to pop it right into the chat box. And that was a video that we did called the top three. The top three stocks that I am buying. And by the way, I have not bought them yet. I'm waiting until after this program. And then I will buy these stocks in one format or another using, guess what? Options as that alternative investment out there. So we'll get back to that top three in a moment, but I just put that link on the screen for those of you that haven't seen that video yet. Okay, let's go ahead and let's get into market news. There isn't a whole lot right now. I mean, we all know where the news and mainstream media has been. Other than the Fly, who won the debate last week, it's been relatively a quiet week. And so I want to get into all things stocks, bonds, currencies, crypto, etc. And let's explain what's going on here with this rise where we've been gapping to the upside. All right. Again, nothing new to me. I am long this market. You guys all should know I am long this market. I've been talking about this, well, at least for the last couple of weeks since we, and really since we got above and crossed above this 340 mark. 360 is on the horizon, right? I don't think it's if anymore. I think it's a matter of when. When are we going to cross above this all-time high? But it better happen before election day. All right, so that's the important point that I want to bring across here when you look at the S&P. A lot of resistance or a lot of support down here around the 323 area, right? Resistance became support. As you can see, the resistance back in June. We had a little bit of a top and followed by some support that happened in July. Big time support last month, and then boom, off to the races. What does the bond market have to say about this? Well, this is interesting because if we move forward, and I look at, let's go to my stock list here. All right, we'll start with SPY. And I want to bring up TLT. And here's TLT. I got a 220-day chart on here. Let's just go back to a 100-day chart and start this all over again. Here we go. So the bond market, which we've seen 170 before, right? And we probably are going to see 170 again. And what I mean by that is maybe not until after November. Maybe not until after January, but we might see 170 again. But we are hitting some support right now down here at and below the 160 level for TLT. All right, the bond market sold off in the last couple weeks as they agreed that the stock market, the traders in riskier assets were in control. And that's what we're seeing right now. All right. We're seeing that with the bond market. Moving forward, UUP. So the US dollar dropped all the way down to 40, or UUP, which is the double dollar index, dropped all the way down to 24.80 before getting a bump up as the market dropped. But as the market gained traction back in near the end of September, we start seeing the US dollar soften up. And the US dollar is back down around 25.12. I would expect we're going to be coming down here below this 25 level, hitting support pretty soon. In order for the stock market to make new highs, a couple of things have to happen. The bond market, number one, cannot go up like a rocket ship. We cannot see traders rolling into bonds. Number two, the cash market has to pull back and continue to pull back to make other things like stocks, like foreign currencies, and even certain commodities go higher. All right? And then number three, and I talked about it already, commodities and this kind of no news is good news for the market coming out of DC. Now, we do have earnings that are going to start happening real soon. I mean, earnings happen all the time, but the bulk of earnings, the Q3 earnings, are going to start coming out here this week. And it's going to be build, and it's going to build. And I think that might be the narrative. That may be the narrative for at least the next couple of weeks until we get to November. And I think that would be a good narrative and could carry the stock market higher even by the end of this month. All right, finally, let's take a look at USO, and then I'm going to move over to cryptocurrency. USO has ran into a box, all right? So back up a second. Look at what happened Memorial Day, 24.5. Look at what happened before Labor Day. We got all the way up to 31. Then we had that big pullback that happened at the beginning of September, and we've been trading between 26.5 and 29.5 pretty much for the month. We got above 29 Thursday and Friday. Oil's down 3% today. Oil looks like it's going to be moving to the lower end of this box. Seasonally, oil is bearish as we start to see more people kind of stay inside again. Yeah, okay, so the restaurants and bars opened up in New York. How long is that going to happen, happen till? We don't know. But what we do know is the traveling public across the U.S. is starting to travel less because it's getting colder. We typically see demand in gas and oil products drop off here in the States, and of course that demand really doesn't come until after the holidays. But remember, the markets are always ahead of any type of announcement. And that's why we start to see that seasonality push to the downside. I think it usually starts in July, but I believe it started in September because everything got pushed forward 2 months. All right, so that's stocks, bonds, currencies, commodities. Let's take a look at one more, gold. My favorite of commodities, back around Labor Day, 160 on GLD, right? As we head into August, we hit a high of 195. We had this big gold rush that came in, and now we've been starting to drop and create these lower highs and higher lows. In order for gold to really get exciting, it's going to need to stay above the 180 mark, which it's at right now, just above 180. But if we can see a close above 185, all of a sudden gold gets shiny again. Now, I'm not saying that there's not a pullback due. In fact, I believe the pullback's it comes down to at or just below the 170 level. But I still think the long-term outlook for gold is bright. If they pass, if or when, whichever way you want to call it, if or when they passed another stimulus act, whether it's in the form of another paycheck protection program stimulus, whether it's in extending unemployment benefits, whatever it's designed to do, help out small businesses, help out consumers, or all of the above. If that happens, expect a pop in GLD and in gold, because it's arbitrary to print more US dollars, make everything else that US dollars buy higher priced. Okay. So that is looking at stocks, bonds, currencies, commodities. Let's go ahead and look at crypto. And for that, I'm going to need to go to my crypto tools. And I want to go to crypto. And what I want to do is I want to go to charts. We have all kinds of things we can look at here with cryptos with Tom's option tools. But for right now, I want to go to Coinbase, all the coins that are available in Coinbase. And I want to look at two of them. I want to look at BTC. And there's BTC. That's Bitcoin. And, we got 255 days on this chart. 100 is enough. Let's update that. There we go, 100. Now, what's been happening in the last week that everybody on Main Street has not heard about until today? Bitcoin's been going higher. Remember, let's back up. July, we were basing out between 9,000 and 9,500 Bitcoin. Then we got this big jump up, right? This big jump up to above 11,000. And then we jumped to 12.5 before pulling back down. And what you see here is the new base. The old base was 9,000. The new base is 10,000. Where are we at now? Well, we just cracked 11.5 today. And so now we're trading above 11,500. So is the new base going to be 11,000? We will see. All right. I'm going to get real excited about Bitcoin. I already hold Bitcoin. You guys know this. I'm long alternative assets, including Bitcoin. All right. I own several of these, and I continue to build on this. And I'm building on other microcurrencies, right? Or alternative cryptocurrencies, whatever way you want to call them, with the idea that we're going to be at around the 15,000 mark by the end of the year. And that's my outlook on crypto. But what we've seen is we've seen a real nice 1,000-point move in the last week. And again, quiet moves are what I like to see in Bitcoin. Now, the latest coin that we got was LTC, which actually ended up getting a signal on. And I'm going to share that with you guys all right now. So we follow currency waves. And currency waves look like this. The last time that we saw a currency wave buy in Litecoin was down here in the low 40s. And the sell came up here in the high 50s. Well, we just got another Litecoin currency signal just yesterday when the stock was trading in the high 40s. And we like this right here at that $50 mark, expecting the move to eclipse the highs that we saw earlier this year at 69. In fact, we're looking for 100 on Litecoin to happen here within the near future. Okay, so that wraps up the first part of what I want to discuss with you all. Let's move on to the next item that I want to discuss, and that is what's been going on, what's been happening, and a look at the past. So a month ago, I talked about 52-week highs. Stocks to buy right now hitting 52-week highs. Also, not too long ago, says 2 weeks ago, but it's more like close to 3. Stocks to buy now using Fibonacci retracements. And a lot of these were the same. And we were talking a lot about FANG at the time. Okay, so I want to go back and I want to revisit Fibonacci retracements. And I want to see what's going on with those. So to do that, we're going to go to Tom's Auto Fibonacci levels. And I'm at the Fibonacci levels because I want to share with you a couple of things that we see going on in the world of Fib. This is Facebook. Now, Facebook, and I need to put a bigger toggle on. There we go. Here's Facebook. So Facebook, from its lows, and what we did was we went back 150 days when we did the video. The lows we were looking at were around the 148 area. The highs were above about 305. We saw that 38% pullback that occurred. And look what's happened since then. We've been moving higher. We have been moving higher on this one. All right. We also looked at this one, Facebook, as a 52-week high, and that we were looking for that little pullback, that 10% pullback. And so both of those are higher than where they were when we first started talking about them. All right. Apple. Now, Apple, I actually featured this one on, if you were listening, was featuring this one on 3 videos just in the last month. Number 1, highs, the highs that were being bought. Number 2, Fibonacci retracement. Take a look at the low down here in the high 50s and the high up here around 134.18, and the pullback, that 38.2% pullback, 104.35, nailed it. And look what's been happening since, right? In fact, if I go back and I'll share with you, picking Apple stock for a 300% return potential. That was a little more than 2 weeks ago we did that. So let's talk about Apple while we're on the subject. We looked at that, the Apple stock, we looked at that potential 300% return, and we were looking at that right here, guys. We were hitting the 38% retracement. In fact, I got the stock and option table right back here from where we were discussing this on the 24th of September, right? 24th of September. In fact, in the video, we were talking about the November 2020 call options. If you look at this, we were looking at spreads. At the time, the stock was actually trading at 108.22. And we looked at, hey, instead of buying those at-the-money calls, which are almost $10, the slightly out-of-the-money ones, which were $8.65, what about putting together something that involved the 120, 130 call spread, buying the 120 calls and selling the 130s and being able to do that for 2.25 or less? And so we did that. We created that risk graph. And we see that for $217, you're buying the 120 calls and simultaneously selling the 130 calls. And when you take 438 minus 221, you get $217, which multiply it times 100, which is what you get for each contract. It's costing you $217 for the trade. All right. Now, we're nowhere near 130. In fact, I think we just crossed 120. Let's go back and take a look. 120, 122 as of right now. So, question remains, where is this stock at? Where is this particular signal at right now, even though we're nowhere near 130? Well, remember, we still got a lot of time left in this trade. So this trade, if I were to go to the latest, see, I have the ability of doing this with this software. Take a look at this. So plus a day, and it trades up really nicely, up $53, plus another day. This is the 28th, up $93. Now, I could do this all day long, but let's just go see where it is today, because Apple did move back and forth, but the trade's up 100% already, right? By the way, here's a teaser for you. In the video, and pretty much like everything else that I say, I mention taking profits on half of your position if it goes up by 100% or more. So this trade, based on that Apple picking video, is now a free trade. We just took our money off the table, right? So that's looking at Apple. Let's go back and take a look at the rest of the Fibonacci levels. Amazon, really climbing up. I mean, it didn't even hit its fib level. And when we were talking about this, I said this was the strongest of the bunch because it didn't even come down and hit the 38% retracement and turned and started moving higher. Google. Oh, wait, Netflix, excuse me. Netflix came down, hit the 38%. Again, we're going from coronavirus March to the highs for Netflix, that close high that actually happened at the end of August. We came back, 38%, boom. We're going to be close to all-time highs on Netflix very, very soon, right? FAANG is for Google. And here's Google. Google was the one that was the weakest we talked about, where we went from 1054.13 to 1717.39. We came right through that 38% retracement. But again, I had mentioned that 1400 was a very good area, all right, where it was a round number support. We bounced off of 14. We got above the 38% retracement level, moved back and forth. But look what's happened in the last week. Boom, boom, boom. And here we are. Google is now trading above 1550, right? And Tesla. Let's end with Tesla for a moment. Now, Tesla was strong, but again, this was one of those most volatile ones where we jumped up from the lows just above 70. Those were the coronavirus March lows to the post highs. I call this the split high at above 510. I think it was just above 5.5 before pulling back. Within a week, it hit its 38% retracement, then moved into into lower highs, higher lows, but is still above, way above that 38% retracement down here at 335. Now, what do these stocks all have in common? Well, they're stocks I'm making money on right now, trading options as an alternative to trading the stocks, which are quite expensive. Now, the last part that I want to talk about with you that we were discussing recently was the October scare video that I did a week ago. In fact, actually, I did it on October 1st. So a little bit more than a week ago. And was there a scare in October? And you know, you look at the thumbnail. That's what this is called. For those of you who are old school like me, took my kids to tell me what a thumbnail was. I thought a thumbnail, I have two of them, one on my left thumb and one on my right. But they said, no, Dad, a thumbnail is a clip that introduces your viewers to a video. All right, so the thumbnail says October scare. It looks like a scare, but when you watch the video, you will see me lay out a plan where through technical analysis, seasonal analysis, that the month of October was likely to be an up month. Let's see where we're at as of right now. I want to go back to stock charts. I want to go back to my regular charts. And we're going to go back to my stock list. And what we're going to do is we're just going to go back 10 days. So I don't want to look at a 100-day chart. I want to look at what's happened in the last 10 days. There you go. Here is October 1st, where we were trading at but around the 337 mark on SPY. Look where we are right now, 351.90. Nice extension up. Does anything in here look like some sort of a scare? Well, maybe on the 6th of October, right? Because remember, the news on the 6th of October is that our president had coronavirus and was going to Walter Reed Hospital. And then, of course, as soon as he started tweeting again, everyone said, oh, he's back to his old self. And the markets have been up ever since. So that was the biggest scare for October. All right. Not the orange pumpkin, the orange man. I say that laughing, joke, haha. Okay. But make no mistake about it. If you take a look at the seriousness here, the market certainly wants to move higher for October. All right. So what do we got going into the month of October? I'm going to share two things with you as we close out and we start talking about where we move from here. First, let's take a look at the fact that seasonally, things still look good. This is today, the 12th. Take a look at all the green on the screen. And again, guys, this is no guarantees. There's no guarantees this is going to continue. All right, but what I'm looking at is I'm looking at seasonality. We're going back 10 and 20 years and seeing that, guess what? The month of October is not as scary as everybody in the media would have you think it to be. All right, if you had listened to a lot of the mainstream media, you'd have been out of the markets, maybe shorting the markets on October 1st, looking for that big October crash. And the only thing that could have crashed may have been your bank account, may have been your brokerage account, because October has been a fairly good month. It's been a great month. All right, so that's the first thing, is that seasonally we still look good. Technically, we still look good. Now, what could cause October to get a little more volatile? All right, so what do we got? Another debate or two that might or might not happen? Okay. Well, we saw the first two debates. That did absolutely nothing to the stock market. So I'm going to go with the idea that if something happens over and over again, that it's probably going to happen again. That's repeatable patterns. Next, we do have earnings coming out. And so when I go to my stock analysis, let's go to analysis, let's go to earnings rankings. And let's take a look at what we have going on here. Calendar days to next earnings. And we're going to look at not my stock list. We want to look at the S&P 500 because that's where the big boys play. And here's what we see. Now, I want you to focus in on this column right here. all right, because J&J is reporting earnings, Citigroup, JP Morgan. So we got some of the consumables, and we got financials reporting. Delta Airlines is reporting as well. Tomorrow, Goldman Sachs, all right, PGR, United Healthcare, United Airlines, PNC. More banks are reporting. We got a lot of banks that are reporting and brokerage services. But as you can see, that we start the week out, 27 of the stocks on my list are reporting earnings this week. Look what happens next week, all right, where it starts with a number 7. That's 7 days from now. And 8s. There's a lot of 8s and 9s on the screen, and 10s, if you will. All right. We go to 11, and we go to 119. So we go from 27 stocks to 119 stocks reporting in the next 2 weeks. You can see the swell is really going to start next week. All right. So I wanted to leave that with you in so much as what you see happening during earnings rankings. Now, would you guys like to see a couple of patterns with earnings before we close up shop today? Because if so, let me jump to another area which I have, which is stock analysis. And I've got high lows, gyrations, dividends, correlations, stock volume, earnings effects. All right, so earnings effects. And what we could look at is, because we're so early into earnings right now, let's look and see what stocks have the best price change before their earnings even come out, the week prior to their earnings coming out, the last 4 earnings cycles. And so what we're going to do is we're going to see what's coming up in the month of October and in the bit of November here. All right, but I'm really interested in seeing what's going on here for the next couple weeks. And what I'm going to do is I'm going to cycle through this list. I'm going to highlight a couple of stocks. All right, I highlighted Tapestry. Why? I'll tell you in a minute. All right, and I'm coming down. I'm going to highlight Diamondback Energy. And why am I highlighting that one? I'll tell you in a minute. And I'm going to highlight DR Horton. And let's just stop with those 3. What do these 3 stocks have in common? All right, Tapestry, TPR, Diamondback Energy, FANG. What a stock symbol. How many people buy FANG thinking they're buying Facebook, Amazon, Apple, Netflix, and Google? You got to imagine there's some people out there doing this. You know there is, all right? Just like Zoom, when people were buying ZOOM, and that stock was going up and had nothing to do with online webinars. And yet the stock was going up lockstep and barrel with Zoom until it was reported that ZOOM was not Zoom. DR Horton, we know what they do. They build houses. What do these 3 have in common? Well, it certainly isn't houses, energy, and Tapestry. These 3 stocks are completely in different areas. No, what they have in common is that their earnings, their stock prices rose on all 4 occasions the week prior to their earnings reports. Tapestry, up 13%, up 26%, up 7%, up 4% the week prior to earnings. All right. Diamondback, up 5%, up 12%, up 4%, up 10%, week prior before earnings. DR Horton, up 6%, up 12%, up 7%, up 4%. These are percentages, all the week before earnings. Probably asking me, when are these guys reporting earnings now? Well, let's go see. 10/29 is Tapestry. 11/2 is Diamondback Energy. That's when the earnings are coming out. 11/10 is DR Horton. So we got some time between now and the time these particular stocks report their earnings. So we can revisit these getting into the next week. In fact, I might go so far as to jump off the train tracks of the regular things that we do here with our midday market movers and talk exclusively on earnings. What say you on that, guys? How about next week we do some stuff on earnings? Oh, Mir, let's sell some weekly puts. I've been doing it every week. In fact, I sold on Friday. I sold some weeklies on Friday. I'm contemplating buying them back today because they did so well. All right. Current profit on the Apple spread that I discussed in the video. Well, I'll show you what the current profit is on that one. All right. It's let's see, 100 and it's between, well, here you go. 101%. based on the video that we did weeks ago. 101% on that one. All right. So guys, thank you very much for joining me this week. I enjoyed it. I hope you did. Next week, what we'll do is we'll focus on earnings because we're going to be in the thick of things next week on earnings. All right. Until then, have a great rest of your day, and we'll see you again soon. Bye now.